Good morning, everybody. Great to have you here. The disadvantage of height when the chair doesn't quite, there we go. I love the energy here. There's so much to talk about, so much to cover. Thank you for the introduction. And now, thinking about the transition and thinking about net zero until 2050, kind of think, wow, it's going to take a lot of money. $6.9 trillion annually to build and maintain low-carbon infrastructure. That's according to PwC. I like to quote Bloomberg, as you know, but we'll go with this one for now. Let's get straight into the thick of the discussion. I know that's why you're here. You're not here to listen to me. You listen to me all morning. We're joined now by two esteemed panelists, Fahad Al-Saif, who's the Senior Managing Director, Global Capital Finance at the Public Investment Fund, and Noel Quinn, the Group Chief Executive Officer at HSBC. Fahad, let's start with you and sort of the journey towards net zero and kind of how the PIF has carved its path out here.
Sure. Bismillah ar-Rahman ar-Rahim. Good afternoon, everybody. Thank you, Yousef, and welcome, Noel, and it's a pleasure to have you over here. And also, I'd like to thank the audience for giving us their time to share what exactly we have to tackle this particular challenge that I believe is a challenge. Since the commitments of the net zero 2050, 2060, there has been promises and commitments. But I think everybody is looking forward toward the actions and delivery. For the past 200 years, the revolution of energy has been the core of the Industrial Revolution. In the coming 30 years, we are supposed to re-engineer that core, whether it's sectorial base or financial base. Just to put numbers into perspective, as you mentioned, trillions of dollars are required between now and 2050 to 2060, which is an aggregation of circa $100 trillion for the asset managers to seek as capital to deploy for all of us to transition. The issue is, today, since all of the sustainability market have opened, we have only $1 trillion. So imagine how much of leaps we have to take. Within PIF, our commitment towards sustainability or sustainable program or sustainability programs within the 13 sectors, we have taken initial steps, and these steps have included setting up the benchmark on exactly how we are able to envisage that market, not being as an issuer or proceeds taker, but more importantly, is becoming more inclusive in terms of all of the stakeholders that are relevant to this market, whether it's regulators, government policies, asset managers, stock exchanges, and indices, etc. The issue that we might be facing is, are we all aligned to take the same pace and not to have defects by multiple paces?
Yeah.
Then we'll be risking exclusions.
We'll get into more of that in a moment. I just want Noel also to weigh in on this, just to kind of give a bit of a contrast versus the PIF coming from a huge financial institutions. You just announced earnings as well, but we'll leave that aside for now. The net zero journey for the bank and how you're trying to cater to clients.
Sure, thank you. For 157 years around the world, HSBC has been financing the industrial landscape of today's world. And for over 70 years here in the Kingdom, we've been doing the same thing. And that's every industrial sector that you can think of we've been involved in. So my view on net zero and financing our ambition for net zero is I've got to deploy my balance sheet capability and our capital markets fundraising capability for the benefit of our clients to make sure that they've got available to them the finance they need for their transition journey. And the operative word there is transition. A lot of people and a lot of commentators think about net zero in a binary sense. There's good, there's bad. There are good companies, bad companies. Good projects, bad projects. Brown or green. The world doesn't work as simply as that. The technology base of today is in the hands of the companies of today. The engineering capabilities of today are in the hands of the companies of today. We need to leverage those companies and help them remodel their technology base in whatever industry they're in on their journey towards net zero. And it's the role of the financial services sector to facilitate the financing of that. It's as simple as that.
Fahad, I mean, in terms of the international partnerships, this goes to something what Noel was just talking about as well. I mean, it's something that you had to build out a little bit because demand wasn't obviously available, neither were the market structures for that matter. Run us through kind of what you're seeing in terms of the response, especially given some of the recent successes from the PIF in this space.
There is a dislocation between supply and demand. It is very hard for financial institutions or asset managers to find green assets, for example. 85% of our green assets globally today sits within Europe. So imagine how much of potential opportunities there might be in Asia or South Hemisphere of the world. I think the challenge is being able to envisage this path with certainty rather than fragmentations or trying to blend your asset or blend your fund as a green fund and then pursue people to participate into it. There has to be an escalation of standards. There has to be unifications of transition. And there has to be an understanding that if I make a bet today, I'm not going to lose in the future if a technological breakout may happen. Getting your investors aligned, being as an issuer or being as an asset provider, getting your investors aligned, getting your government policies aligned, getting your financial institutions aligned. It's important that everybody scores the point because everybody is willing to score that point. The worst thing today is you have Asia split it away from the rest of the market since we have the most emerging and developing markets over there. What I would like to say, it is no more a niche market. It's a norm that everybody has to have the manifest and exactly the playbook, how to take that journey with high certainty. And to be frank, at PIF, we have faced multiple of milestones of uncertainty. And then we've decided to leapfrog all of the intermediates, and we spoke to the financial institutions and the asset managers, and we back-reversed how exactly we are able to make sure that we have a credible, reliable, transparent green assets or green papers to be issued globally.
I mean, the issue is with blended finance, of course, is yes, it takes the risk away for private investors, but it adds a risk premium, and that could come back to haunt the whole financing structure later on in the term. But it's something, of course, the stakeholders work through when they make their specific agreements. I know, can I get you to share your view as well on sort of the international component to this, especially given HSBC's reach, right?
I think what Fahad said is absolutely correct. Listen, any corporate banker in the world knows what it feels like to finance an automotive plant of today or yesterday or 10 years ago, a steel plant. We all know that. We've seen those cash flows many times. We know the risk profiles, the technology risk, the business case risk. It's when you're starting to look at new projects and new initiatives that haven't got a track record and a history. And that, there was one important word there, transparency. Telling the story of that new project for the ecosystem as a whole, what government support is going to be in place at a policy level, what government financing may be in place at a grant level, what's going to come from equity in the development phase of new technology, what's going to come from debt, what's going to come from the private markets, and what's going to come from the public markets. The key to answering all those questions for a new initiative with new technology, new cash flows, new business risks that haven't been seen before is a transparent articulation of that whole picture from government policy to government financing to private sector financing. And a lot of people talk about, well, that's blended finance. It is, because no one provider of finance can finance all of that on their own. But the first part of a blended finance journey is a clear articulation of the story, the policy, and the framework. And if I look at what the Kingdom's doing, they are articulating a very clear vision of the technologies they want to pursue, how they're going to try and bring those projects to market, and what the role of the Kingdom's policy framework is and public financing framework is, and then what they want the role of the private sector to be. It's that clear articulation. I don't see that same clarity in all markets I see around the world.
I mean, we're talking here about what's going to happen in 2050 and 2060, and the ambitions are grand. But we have to go through the short term as well to get to that destination. And I look at higher interest rates, I look at weaker economic growth, I look at higher inflation. I look at the geopolitical fires that are everywhere, and we're covering this day in, day out, be it US and China and Russia and everything else that's in there. How are you going to get through 2023?
Very good question. Let me take a step backward and just describe what is happening in the markets, since we had recently an unprecedented milestone as PIF being a debut issuer in the green market. The investors are observing and watching two important pillars achieving the net zero financing. So there are 90% of the carbon emissions are committed by the governments to offset by 2050, 2060. So what do you expect from governments over here are policies enabling us to approach that. And also what the investors and the issuers and the asset managers are expecting, on the other hand, are incentives that are clear and credible, so they will be more enabled and more excited to join. In the middle, whether it's asset managers or financiers or participants, they are actually observing the progress momentum, whether there will be an arbitrage to put my money into this or to wait further because people are checking these milestones. Today, with all of these challenges, it's you particularly as an issuer or an asset owner persuading all of that chain by yourself. Very exhausting journey. What we expect that all of this alignment will enable that inclusive participation of all the stakeholders globally, and then subject to what Noel mentioned, who will be able to score high on transparency, credibility, and reliability, then you will have the ecosystem behind you to support you in progressing within your investments.
And there's one other dimension to it. If all of that new investment takes place in a special purpose vehicle, without a track record, without a fundraising capability, as opposed to as part of an existing architecture, an existing company, then my fear, and if the world bifurcates, as I say, into a good company and a bad company, the overall cost of capital for both will go up. Because the risk profile of the new entity will be higher, and the risk profile of the company that's with today's technology will progressively go up because of stranded asset risk. And if you completely bifurcate the funding sources into good and bad, and you don't leverage today's corporate architecture or institutional architecture like PIF, then the overall cost of capital will go up. And my view is we need to work together to leverage today's funding capacity of today's companies and today's engineering capacity of today's companies to build the future. And that's why I don't think it's short, medium, or long-term challenge. I think it's just a transition over time that we're going to achieve it.
I mean,
allow me just to add that, if you don't mind, Yousef. As you mentioned, inflation, geopolitics, uncertainty in the market, supply chain disruptions, but also if the financial institutions and the asset managers are not able to quantify the cost of capital to deploy and the evaluation of that capital to be deployed into net zero financing type. And by the way, these financings are superly intensive, highly capital funding that are required, that most of them are emerging and developing markets. So how are we able to ensure that these emerging markets and developing markets are able to get the right cost of capital and get the right funding and the diversity of funding to ensure that they're able to progress? So it would require educating everybody into the system and ensuring that we are able to have the right incentives. And as we have on the description of this session, is the blended financings. So there is a very important role of multilateral developmental institutions to be also part of the ecosystem and to facilitate these discussions.
Yeah, and the blended finance, this is something that the governor of the Bank of Singapore has talked about a lot,
Yep.
monetary policy there. I mean, in terms of blended finance, not keeping up with the kind of vision that was originally articulated in 2015, that there could have been a lot more that could have been done, and that we have a little bit of catching up to do. But I still didn't get like a little bit of a view on 2023. I do want to get a view on that in terms of how we're going to make it through that. Like, is there going to be a lot rougher a patch to come before we can secure some of the longer term plans, or do you think that 2023 things look actually a little bit better for whatever reason that may be?
Well, if you're looking at 2023, clearly we can't just look at the future on putting all of our investment into the future and ignoring today. There needs to be a capacity to survive and for society to have some of the basic needs met, not just in 23, but 23, 4, 5, and 6. So we have to build a bridge into the future. It can't be just build a new road and don't know how you're going to get there. So we have to provide our collective capacity to also continue to support the energy sources of today. And it won't be just for 23. We have to bridge into that future. But that bridge can be a little bit easier to build if we collectively get inflation under control and government policy around the world gets inflation under control, because building that bridge will be very expensive with high inflation and high interest rates. Now, I'm not an economist, I'm just a simple banker, but I just know the maths will be a lot more difficult for everybody if we don't get that bridge built with an effective cost of capital in the near term. There will be challenges in 2023. I don't think we should deny that. Economic and challenges of stakeholders having different views. There are many protests taking place now where people just want to switch off today's energy sources. You can't. Society, it's not right to do that to society, and society would not react well to that. So we have to continue to support today as well.
In fact, the Kingdom is in a very unique position, and I think it shows from the attendance here at FII this year, which is probably a record number of attendance. I understand it's sort of north of 5,000 people that have come here. How is the Kingdom going to use that, or the PIF going to use that to its advantage in 2023? How can you kind of maybe insulate or find opportunities where there's weakness broadly around the world?
I think compared to others, we have a very clear direction and path. Yes, we believe that there will be cyclicalities, uncertainties, changes, certain times and certain times. I think we are very much aware that we are going to surf through all of these challenges. There are set KPIs that each one of us has to achieve. Within the PIF, at least at my end, being the responsible with the division and my colleagues to raise the required capital for PIF with continuity and certainty to ensure that we are able to raise the capital at any point of time with an acceptable risk parameters at a fair price. So we have our own values. We wanted to communicate to the globe that we are credible, reliable, and transparent. The recent issuance have further solidified what PIF have promised last year, as we wanted to become a market maker rather than a taker into this particular area. We believe that we have tremendous amount of opportunities to encourage private sector locally, regionally, internationally to participate into them. Our capital market is extremely robust across all of the uncertainties and inflation rates that are going higher, and also the tightening policy that we're going. We still have a very great functioning markets. There has been a great transparency of our yield curve locally and internationally. People are able right now with high reliability to reprice or price the working capital cost. Us, as the Public Investment Fund, have decided to take one step further by being a green issuer. And I would like just to take 1 minute into that. It's actually a journey that we have taken that started initially by we wanted to become credit rated. So we have communicated with the credit rating agencies. We have taken that path, going through the qualitative and the quantitative measures and being able to ensure that we are able to achieve what PIF deserves as a credit rating. Then we took it a further step. We've put together our green finance framework. How exactly we are going to raise the proceeds? How are we exactly going to deploy the proceeds? What sort of screening and filtering of projects that we should be putting the proceeds into? How are we able to have the right governance and compliant, and to include multiple parties within PIF to ensure that we are able to have an independent evaluation of the process? Yeah. And then how are we able to report going forward to the investors, but also publicly report on the impact of these financings to the Kingdom and abroad?
It's quite the journey that the PIF has went through, and I think we all look forward to what else is to come. Noel, any closing thoughts from your end?
I just congratulate the vision of the PIF and the Kingdom, and also the way that they're looking at financing, because they are looking at trying to bring blended finance, not out of the concept into the reality, and some of the deal structures they're looking at, and the transparency. I wish my own organization was as good on the KPIs and the use of KPIs, but I can guarantee you everything I've seen from PIF and the Kingdom, the use of KPIs to underpin a vision, to monitor progress, is something that I think the world needs to put in place if they're going to achieve their ambitions for net zero.
Yousef, if we're wrapping up, are we closing?
We're closing, yeah.
Okay, I do have a final statement to say. Last year, same place, we've said that we are going to promise and we are committed. This year, we have delivered with actions. A year ago, we've said that we're going to raise the benchmark higher by being the first issuer of a green bond. We went an extra mile by being the first in history to issue 100 years green bond. And last year, we've announced the voluntary carbon market credit. 5 minutes from now, we're going to have the largest ever auction into that market. Many congrats to Kingdom of Saudi Arabia.
All right, so we've got a deal then. We meet again in 5 years, and we compare notes, and we'll leave it there. Thank you very much.
Thank you.
For a fantastic conversation. Fahad, the Senior Managing Director, Global Capital Finance, the Public Investment Fund, of course, Noel Quinn, the Group Chief Executive Officer at HSBC. And thank you for being such a patient audience and for your attention. And still plenty more to come, of course, throughout the morning and the afternoon. Thank you again.